Hello everyone, this is Jeb Hamwerger from goldstocktrades.com. Today is Thursday, January 5th, 2012. I wanted to give an update, a sort of year in review of 2011, and what are some changes that we may be expecting in 2012. First of all, I have highlighted several different charts. I'm going to look at different markets right now to view exactly what has occurred over 2011 in the foreign exchange markets and the precious metals markets and the general equity and treasury markets and the oil market. So we're going to look very closely at what has happened in 2011. We must not forget that the euro throughout 2010 and even the beginning of 2011 was looked upon very favorably. Many thought that the Europeans were adopting austerity measures, that they were getting their budgets back into order. Well, that couldn't have been further from the truth. And we have been saying that the euro for a long time was in danger. It reached very overbought territory in May, and then we saw the reemergence of the sovereign debt fears in the pigs, with the pigs, Portugal, Italy, Ireland, Spain, Greece. We saw a major turn in the euro. At the same time, we saw a rally into the dollar, into treasuries, okay, and into gold. So we saw the reemergence of deflation, global deflation, where the dollar and the gold rallied simultaneously until September. At that time in September, we had a correction in gold. We had a correction in the dollar. So the gold and the dollar and the treasuries have been rallying. They've been very correlated. Their gains. At that time, the euro rallied, and the risk-on rally began in early October. And we saw copper make a jump and making higher lows. We've seen the oil index make a considerable move higher. We've also seen the Dow Industrials in early October make a key low and a very powerful reversal on accelerating higher highs, closing above the 200-day and breaking through key resistance. And now, as a matter of fact, the industrials may be testing the earlier 2011 highs. So we have seen almost a reversal, and the rally into the dollar and to the bond appears to be sort of stalling out here. Notice, take a look at the bond. Since October, it hasn't been able to make a higher high. It hasn't been able to make a breakout. And it's still at very overvalued levels. So we have to be careful that maybe it won't be able to hold these high grounds and maybe reversing lower. The same way with the dollar. It's reaching key resistance at the 81 level where it hit last winter in 2010. That 81 level is a very crucial level. So we need to see if that money, if the cash will come back. We're seeing it coming back into the equity market. Recently, we saw a bounce in 2012 into the silver, into the commodities. We think that that's going to continue. We think all this cash and all this money that has gone into treasuries to try to escape the euro and has really not gone into gold and silver will come back into the precious metals market and will come back into the miners and into the junior miners. We have seen impressive moves in the rare earths, uranium, and precious metal sectors. So stay tuned, and we will keep you posted.